Welcome to the show. I'm John DeBona, and I'm glad you're here. This is where we cut through the noise and break down the issues happening in our country. Today, we're tackling Project 2025's plan to dismantle the SAVE Act, a federal program that protects millions of Americans struggling with student debt. But make no mistake, this isn't just about budget cuts. Project 2025 opens the door for predatory lending practices, shifting control from public protections to private lenders who profit from America's student debt crisis. Let's dig into what this really means for you, your family, and our future. Before we start, head over to your favorite social media platform and search for turnleftpac.org. Sign up for our emails, make a donation to support our work. Your help makes sure that we can get these facts out to everyone who needs to hear them. So, the obvious question: why is Project 2025 targeting programs like the SAVE Act in the first place? Project 2025 claims that targeting federal programs like the SAVE Act is about trimming down government waste. But let's dig into what's really going on here. The SAVE Act isn't just another budget line item, it's a lifeline. This program bases student loan payments on income, making sure that borrowers aren't being crippled by debt. For millions of people, especially those from lower income backgrounds, this is the only way they can make higher education affordable. But Project 2025 views this as a luxury the government shouldn't provide, framing it as unnecessary burden on taxpayers. They argue it's time for students and borrowers to take responsibility for their own debt. But they're missing or ignoring the bigger picture. These protections aren't just a handout. They're a buffer that prevents people from slipping into poverty and defaulting on their loans, which would create an economic disaster. By targeting programs like the SAVE Act, Project 2025 is effectively deciding who deserves a shot at financial stability and who gets thrown to the wolves. And in going along with this, we have to ask the question: what's the practical effect of taking away the SAVE Act? And the answer to that is the impact would be huge. Without the SAVE Act's income-based caps, borrowers would face steep monthly payments that don't account for their financial situation. Imagine a single parent or a recent graduate working an entry-level job. These aren't hypothetical struggles. When we lose income-based repayment options, we're setting people up to fail from the start. And the effects go beyond individual borrowers. We're talking about higher default rates across the board, which tanks credit scores and limits access to financial opportunities for years. People won't be able to buy homes, start businesses, or even qualify for car loans. The impact spirals outward, affecting families and communities. And then there's the wider economic fallout. With more people saddled by debt, consumer spending will take a hit, slowing down the economy. Project 2025 isn't just stripping away a federal program, it's dismantling the economic safety net that helps communities thrive. If you think cutting the SAVE Act is harsh, that's only part of Project 2025's plan. By eliminating these protections, they're inviting in an entirely new threat: predatory lenders. And when we come back from the break, we're going to talk about how they are just waiting to capitalize off of every desperate borrower.
When I ran for Congress, we flipped more Trump voters blue than any other congressional race in the country. We did this by calling out the GOP's lies and speaking truth against their $1 million attack ads. I've now partnered with Turn Left, and we're taking the fight to the extremists like Marge the Trainwreck Green, Ted Cruz, and Josh Hawley, to name a few. And I'm asking each and every one of you all to donate $25 today to the group that is absolutely helping to send these jackaloons packing. It's time to speak truth to power and turn left.
And as we address predatory lending, the question becomes, how does Project 2025's agenda open the door for predatory lenders to target student borrowers? Project 2025's decision to eliminate federal protections essentially clears a path for private, profit-driven lenders to step in and take advantage of borrowers. Without programs like the SAVE Act, which caps interest rates and offers flexible repayment options, private lenders will have free rein. We've seen what happens when this kind of deregulation occurs. Banks and private lenders use every opportunity to increase their profits, and that means targeting the most vulnerable. These private entities have no obligation to consider someone's income or financial struggles, so they can impose high interest rates, steep fees, and rigid terms that only serve to maximize their profits. And let's not forget predatory lenders specialize in making money off of people who can't pay off their debt quickly. By pushing borrowers into cycles of debt, they can rake in more money through interest and fees that they would from responsible lending practices. This approach isn't about helping borrowers. It's about creating a system that makes people dependent on debt. Project 2025 essentially hands over the keys to the student loan industry to private lenders, opening the floodgates for predatory practices. And who pays the price? It's everyday Americans who are already facing massive financial challenges. This begs the question, what protections could borrowers lose that would make them more vulnerable to high interest rates and aggressive repayment demands? Right now, federal programs like SAVE provide predictability and limit the financial strain on borrowers. Payments are based on income, which makes them manageable, and there's no fear of sudden interest spikes or unaffordable terms. But without these programs, borrowers lose every safeguard that currently protects them. Private lenders could enforce high interest rates, sneaky fees, and rigid repayment schedules that give borrowers no breathing room. We're talking about high rates of interest that double or triple the total repayment amount over time. For borrowers, this means a lifetime of paying down debt without ever making a dent in the principal. Plus, private lenders have the legal right to go after borrowers with extreme measures like wage garnishments, collection harassment, and even lawsuits. Project 2025's approach could lead to a predatory lending landscape where financial ruin becomes the norm, not the exception. Without these protections, millions will be at risk of falling into inescapable debt traps. With federal protections gone, Project 2025 shifts control directly into the hands of private lenders. And this brings up the question, If we hand over all control, who stands to benefit? After the break, we'll answer that.
Today, we have an amazing show for you. Join myself, special guests, and celebrities.
What's going on, Ice-T? Andrew Yang.
Somebody else was hopping on.
Oh, hold on.
What's going on, Battle?
As we roast GQP Jackaloons.
He may not be a real businessman, but he is one hell of a con artist.
That's what it is. That's what they got indicted for. Treason and sedition. And it addresses the headlines of the day.
They must be held accountable.
Live streaming every night. I got more time in a friggin' port in a friggin' combat zone than you've probably got in the military. This is Ojeda Live.
So let's ask a direct question. Is Project 2025 trying to hand control over to private lenders? Yes. Project 2025 isn't just about cutting government spending. It's about fundamentally changing who controls student debt in this country. Right now, federal programs offer a level of protection and oversight that holds lenders accountable and keeps borrowers safe from the worst abuses. But Project 2025 aims to strip away these federal programs and shift control directly to private lenders. This isn't just a policy choice, it's a power transfer. Private lenders operate for profit with little to no interest in the well-being of borrowers. If Project 2025 succeeds, it essentially hands the keys of the student loan industry over to these profit-driven companies. Private lenders have one goal: to maximize their returns, which means charging high interest rates, adding fees, and enforcing rigid repayment terms. They aren't obligated to consider a borrower's financial situation, which means people will end up with repayment plans that don't reflect their income or ability to pay. Project 2025's plan isn't about creating self-sufficiency. It's about creating dependency on private loans. This shift means that instead of protecting people from debt, we're actively pushing them into a system where debt is nearly inescapable. This isn't a free market. It's a rigged game where only the lenders win. How about another direct question? What are the risks of moving student loans entirely to the private sector? The risks are massive. When private lenders take control, borrowers lose all the flexibility and protections that come with federal programs. Private lenders aren't obligated to offer income-based repayment or consider a borrower's financial struggles. Instead, they set fixed terms, enforce strict penalties, and charge interest rates that can make repayment nearly impossible. Without federal protections, borrowers are vulnerable to rising interest rates and fees that add thousands to their debt. And private lenders use some of the harshest tactics in the industry to collect payments, including wage garnishment, constant harassment, and even taking people to court. This shift isn't just dangerous for individual borrowers, it affects the entire economy. When people are trapped in unmanageable debt, they can't contribute to the economy in other ways. They're stuck paying down debt rather than buying homes, starting businesses, or saving for retirement. Project 2025's shift to private control essentially turns student debt into a lifelong burden for millions, making it harder for people to buy homes, start families, or invest in their futures. This isn't just a student loan crisis, it's an economic trap. Project 2025 isn't just tinkering with government spending. It's about giving over a massive share of control in this country's student loan industry to private interest. Right now, federal loan programs exist to offer protections and accountability measures that prevent abuses, to keep people safe from falling into lifelong financial traps. Consider what this means. Federal protections, like income based repayment options, offer a vital lifeline for borrowers. They allow people to make monthly payments based on their actual financial situations, easing the burden for those earning less and making it possible for people to work their way out of debt over time. Federal oversight also means accountability. It ensures lenders have to answer to someone, providing at least some level of protection for borrowers. By stripping away these protections, Project 2025 takes us from a structure where loans are manageable to a model where control rests entirely with profit-driven lenders. This power transfer is not just another policy shift. It's a move that essentially locks borrowers into a system where their financial well-being is a secondary concern at best. The risks of shifting student loans entirely to the private sector go far beyond just increased interest rates or harsher repayment terms. It's a structural overhaul that fundamentally changes the relationship between borrower and lender. Under federal programs, there's flexibility built into the system, repayment options that adjust with income, deferment options for times of financial hardship, and even forgiveness options for public service workers. In contrast, private lenders don't offer these benefits because to them, loans are about maximizing returns, plain and simple. They're in this for profit, not to protect or assist borrowers. Let's be real about what this shift means for people trying to pay back their loans. When private lenders take control, borrowers lose all the safety nets that federal programs offer. With no income-based repayment options, no forgiveness programs, no protections against predatory interest rates, and no deferment flexibility, borrowers become subject to unyielding terms that turn loans into a lifelong burden. And the tactics private lenders use to collect on debts are relentless. Wage garnishment, constant harassment, and even legal action. People can find themselves facing lawsuits, damage to their credit, and wage deductions just to meet loan payments. This is about more than just high interest rates. It's about shifting people from a position of manageable debt to unmanageable debt when they're paying off loans for the rest of their lives without ever really moving forward. But it doesn't stop with the individuals holding these loans. This kind of shift impacts the entire economy. When people are trapped in unmanageable debt, they can't contribute to the economy in meaningful ways. They're locked out of home ownership, can't start businesses, and aren't able to save for retirement. Instead of building wealth, they're stuck paying off interest and fees, essentially to sustain the profits of these lenders rather than investing in their own futures. This isn't just a student loan crisis. It's an economic trap that drains the spending power of an entire generation and weakens the overall economy in ways that can ripple for decades. Here's the bottom line. Project 2025's plan to dismantle protections like the SAVE Act isn't just a budget decision. It's a direct attack on the financial stability of millions of Americans, stripping away safeguards and opening doors for predatory practices. By shifting control to private lenders, Project 2025 puts power in the hands of those who profit from keeping people in debt. This isn't just about dollars and cents. It's about who gets a fair shot at a stable future and who doesn't. Private lenders will only look at one thing, the bottom line. And the reality is that as they profit, people pay with their futures, with their opportunities, and often with their well-being. We're not just talking about policy, we're talking about real lives, about creating a system where financial success is only accessible to those who can avoid the debt trap altogether. Project 2025's plan means we'll see more and more people trapped in a debt cycle they can't escape. And make no mistake, it's deliberate. Because when people are in debt, they're easier to control. So stay vigilant, stay informed, and remember, sometimes reading between the lines is the only way to see the whole picture. And while you're at it, support the cause for change. Visit turnleftpac.org and join the fight for a future where people aren't just numbers on a balance sheet, but have a real chance at building lives without fear of financial ruin. And with that, stay tuned next for Ojeda Live.